Today we see an interesting movement in the SPY, QQQ and several stocks that we are going to analyze here together as we see their prices trying to stabilize just above critical support points. So in today's video, let's see what's going on over here. This is the Finance Hydra channel where every single day we study the market together in order to design strategies and scenarios that we can work with. We always base our reading on technical and statistical analysis without guesswork or opinion. My name is Nathan. Welcome to another daily study. Now, as we can see here, the SPY is trying to stabilize its price above a very meaningful support level, $576, the previous open gap from November 6, which is clearly acting as a support level for us right now. Now, you may be asking, Nathan, is today's reaction dangerous enough to reject yesterday's bullish reaction? Not yet. Yesterday we saw a meaningful bullish candlestick pattern above the 576. However, in order to completely reject any possibility of a bottom signal, we must close below yesterday's low in order to reject this bullish candle completely. All right, so far, yes, we are correcting. However, we are far from rejecting yesterday's candle yet. What's more, by rejecting yesterday's candle, we are going to officially lose the 576 support level, meaning SPY is going to retest lower support levels, possibly fulfilling the idea that this is indeed a head and shoulders chart pattern, and in this case its next technical target is the size of the head projected in the direction of the breakout, meaning we could easily retest the 563, the 564 support level, which was on the weekly chart a previous top level over here from July last year. Therefore, we see many technical evidence suggesting that yes, SPY could correct more. However, in order to do that, we need to completely reject yesterday's candle first, because only then we are going to avoid the possibility of a bottom signal. Now, Nathan, so we see bottom signal over here, right? So SPY is supposed to fly from here. Well, it is trying to, but we have yet to break a few resistance levels first. For instance, we still have to break the 586, the previous neckline of this head and shoulders chart pattern, alright? Because this head and shoulders is still in play. It is not going to be easy to reject this bearish chart structure, which by the way is a quite reliable one. Of course, pullbacks to the neckline area are completely acceptable and even normal. As far as I remember, according to Thomas Bukowski's studies, a pullback to the neckline after the breakout of a head and shoulders occurs 67 or 66% of the time. All right, I don't recall the number correctly. I recommend taking a look at the patternsite.com for more information. All right, but so far, we see a possible bounce. Therefore, it is extremely important for the SPY to break the 586. What's more, we still see the 21-day EMA, the exponential moving average, pointing downwards above the current price. In addition, we still see lower highs, lower lows. So do you understand why it is not going to be that easy for the SPY to recover? We are still below a few resistance levels. We are still making a bearish chart structure over here. So we gotta see a crystal clear breakout of the 586 of the 21-day EMA, and then maybe SPY is going to actually reverse the medium-term downtrend observed on the daily chart. Now, if you ask me, now is the perfect time to do so, because on the weekly chart we are just above a major trend line over here, right? So what's more, we are just above, we are trading just around the 21 weekly moving average. So we see a kind of double support level, triple support level, 21 weekly moving average purple trend line connecting the previous bottom levels since October 2023 and the gap support level observed on the daily chart. Therefore, we see a triple support level in 3 different time frames, and this is how you do a complete multiple time frame analysis, looking at different time frames, looking at different key points that could support your thesis, regardless if it is bullish or bearish. All that matters right now is that SPY is still trading in a no man's land, right, between its major support level and its major resistance levels. We gotta see crystal clear breakout in order to understand how the SPY could behave next. All right, therefore it is very important to observe these two support and resistance levels, because only a meaningful breakout will bring something new. Regarding the QQQ, we also see the possibility of a bottom signal. However, today's reaction is slightly more bearish, because just like the SPY, we see the QQQ trading between a major support level and a major resistance level. As our support level is around 502 over here, which was the previous top level from July last year as well. Now is a crystal clear support level. Another example of how the principle of polarity in technical analysis works. We see this key point acting as a support level for the SPY, while for the QQQ, while its major resistance level is at 509. The previous support level here, right? Here again. And right now it is acting as a resistance level today. Again, principle of polarity in technical analysis, previous support levels working as current resistance level. All right, so 509 is its most important resistance level to break, while the 502, while the $500 area. All right, let's work with a round number, because we see the 502 on the daily chart, and we see the 21 weekly moving average on the weekly chart, and we also see the possibility of the QQQ. We also see the QQQ actually trading inside an ascending channel. All right, so if we lose this support area around the $500 area, we may see the QQQ seeking its lower support level, the support line of this ascending channel, next on the weekly chart. I know it is not that much. I mean, we are gonna drop roughly 3%, right? It feels like it is not that much, but considering that we are talking about the QQQ, it is a lot. All right, it is a major ETF which follows the Nasdaq ETF, so tech stocks will suffer a lot if we see the QQQ dropping 3%. Therefore, let's watch the $500 area with extremely caution. We gotta keep our eyes open over here, while only a meaningful breakout of the 509 will bring a meaningful bullish rally next. All right, now how this movement could affect our stocks. For instance, we see Nvidia, which is also trading very close to its support level. All right, $130, which feels to be the neckline, the trigger point of a possible, not triggered yet, a possible triple top chart pattern. Okay, we see multiple retests of the all-time high area near the 149, while we see a major support level at 130. If you ask me, I am not going to necessarily work with a triple top. However, I see more like a sideways correction. All right, it is a congestion. We see more like a rectangle chart pattern instead of a clear double top, triple top, or I don't know, head and shoulders chart pattern. Right, I see a simple, very simple rectangle chart pattern. We see Nvidia trading between the 130 and the 150s. So right now, we are trying to make a bottom signal over here. I know today's reaction sucks. It is not looking that good. However, we are not yet rejecting the possibility of a bottom signal. We are not triggering a bottom signal yet. okay? But at least we are not rejecting the idea of a possible bullish reaction. We are going to only reject any possibility of a bullish reaction if we see Nvidia actually losing the 130s, leaving the support level behind. Then, alright, then Nvidia will possibly retest the 115 next, which by the way, is very close. Let me see if that's correct. Is very close to the technical target of this rectangle chart pattern projected in the direction of the breakout. Therefore, the 150, the $113 area is going to be our next major support level if we actually see Nvidia rejecting the possibility of a bottom signal. Right now, we still see a valid bullish reaction from yesterday, which wasn't rejected yet. If it does, okay, great, Nvidia is going to collapse to lower levels. That's fantastic. It is maybe this is going to trigger a sell signal for us. I'm not so sure about that yet, but if we see a bottom signal, if we see another bullish reaction like tomorrow, in the next few days, fantastic. Probably Nvidia will trigger another buy signal because, guys, we always buy near support levels, not near resistance levels, not near far away from our support levels. We buy around a crystal clear support level. Why, Nathan? Because near support levels, the risk-reward ratio is optimized, is at its peak. This is how you survive in the long term. When your gains consistently outweigh your losses, if you lose, okay, you're gonna lose little. If you make money, all right, we can see another rally to the 159 again. Fantastic. You are going to make a decent amount of money. What you are going to risk will be completely eclipsed by any possibility of another bullish rally over here. So it is not about avoiding losses. This is amateurs thinking. We don't avoid losses because that's absolutely inevitable for everyone. What is expected is that we have the maturity and the discipline to stick with our strategy because we are confident in it. And you know that even if you make losses from time to time, in the long term, you can be consistent. I have said many times here, we at the 5% project have an accuracy rate of 70%. 70%. Out of 10 trades, 7 will make a win. 3 will make a loss on average, all right? On average, long-term speaking, and that's fine because we control our risk very effectively. Now, yes, we have our educational project, the 5% project, where you receive exclusive trading signals and strategies. I don't just tell you it is a buy, it is a sell. No, I explain all the technical reasons why you should buy, where you should sell, and why you should sell. We are a skin in the game community with a great track record. You can test our service for free. You won't be charged. There is no obligation because here our commitment is to demonstrate value to you and our members first. Join us and get to know our work. The link to my website is in this video's description. Join the 5% project right now. Okay, so this is my honest opinion on Nvidia, all right? If we see Nvidia actually losing the support level, it is going to make a more bearish reaction, and then maybe we are going to sell it. Maybe I'm going to recommend selling Nvidia over here, but so far, okay, it is not like Tesla. It is totally different, but the same idea is applicable over here as well. If Tesla actually triggers a top signal over here, all right, it is going to trigger a top signal below the 414. Yesterday and in the past few days, I have been telling you guys that I have a personal bearish thesis in Tesla. Today, by breaking the 414, it kind of rejected my original thesis, but right now we see another possible top signal. So it feels like Tesla still could retest our next major support level on the medium term, on the daily chart at 500. I'm so sorry, 500. $358. The previous top level, which is supposed to act as our next support level. Again, principle of polarity, all right? So we see this key point as our next major support level, and we see another bearish reaction in Tesla below this major resistance level. If you ask me, okay, it is too soon to tell, right? But we are on the verge of making a top signal, which could be a sell signal to us. Of course, I'm gonna trigger, if we see any trigger point, any top signal actually getting triggered, I'm gonna tell you guys on the 5% project, but so far it is only an alarming signal. Okay, let's pay attention on how this signal is going to play tomorrow, maybe in the next few days. Right now we see AMD trying to reject yesterday's bullish reaction. We are avoiding another bottom signal, and the previous top level at $117 is acting as a resistance level for us right now today. We see the 121 as a major support level on the weekly chart, all right? We are losing this support level. So long-term speaking, we could see AMD retesting the $93 again, all right? That would be a quite dramatic drop, but we don't see any meaningful other technical support levels. Maybe the $100 is going to be a psychological support level for us, but so far there is no technical evidence that we are going to find a bottom signal over here. We only see bearish reactions. There is not a single buy signal, not a single bullish reaction, meaningful bullish reaction. Now, Palantir is also having a very rough time. We see three major resistance levels on Palantir right now. First one, we see the 21-day EMA. Second, we see the $71. Third, we see the $68, the previous support level from December 11 over here, which guess what? Principle of polarity again. The previous top level is acting as a resistance level two times over here, January 10 and right now today again. We failed in breaking the $68 again, meaning Palantir is indeed in bearish territory. We just triggered this bearish pivot point. We lost all of our major support levels, and right now the last support level is acting as a major resistance level. So there is no deny, all right? There is no. I am so sorry to tell you guys. I know I have many Palantir's fans over here, but guys, bearish, all right? We are bearish. If we see Palantir breaking the $68, maybe tomorrow making a miraculous bullish reaction, recovering from today's bearish candle over here, all right, good, very good. Maybe we're going to find a bottom signal over here, but right now there is no technical evidence supporting this idea. Meanwhile, we see Sofi. Also, just like Palantir, Sofi is having a very rough time below its resistance levels, below the 21-day EMA and below the $14.85, which was the previous support level on December 6, and again a few times on December 18, December 19, December 20, and right now it is acting as a resistance level for us, along with the 21-day EMA, the exponential moving average on the daily chart. Therefore, if you ask me, Nathan, in your humble opinion, what it takes for Sofi to reverse this bearish sentiment, we gotta break these two resistance levels, closing above these key points, and then we may start see Sofi reacting decently again, possibly to retest the all-time high. For now, it is a very difficult position for Sofi to actually reverse this bearish sentiment. What's more, there is still the possibility of a head and shoulders chart pattern which was triggered last week, or I'm so sorry, on January 2 over here. Right now, we saw a pullback to the neckline area, to the 21-day EMA, and as I told you guys, a pullback after the breakout of a head and shoulders occurs roughly 66 or 67% of the time. Therefore, totally plausible to see this bounce over here. It is not meaningful. It doesn't mean that we are going to reverse the bearish sentiment. We still see lower highs, lower lows. We still see Sofi below its resistance levels. So we are still bearish until technical evidence proves otherwise. All right. Now, we see Micron. Micron, if you ask me, could trigger a buy signal to me, according to my strategy. Now, of course, it is too soon to tell, but it could, because for a few technical reasons. Now, we are reacting above a key point, which was a previous resistance level, a previous support level as well, multiple times. Now, it is acting as a support level at $96.50 and the 59, I'm so sorry, and the 18 cents over here, okay? So this key point around $96 is indeed a meaningful inflection point. We see Micron trying to stabilize above the 21-day moving average. So we see a double support level over here. Now, yesterday we saw a hammer candlestick pattern. We are about to close above this hammer's high. Therefore, we are technically triggering this bullish reversal chart pattern, candlestick pattern, which according to Thomas Bukowski's studies, it reverses the trend 60% of the time, if I recall correctly. Therefore, it is a, statistically speaking, meaningful bullish reaction above a technical speaking interesting key point, inflection point. Therefore, it could be a buy. If I see a buy, it is too soon to tell, right? But if we see a buy, I'm gonna share the technical strategy on our Telegram channel. Again, you are free to join us, all right? It is free to test. Join us over there, and then you will receive our premium strategies on many stocks, including Micron, Nvidia, Tesla, AMD, Palantir, etc. So just take a look over there. You are invited. But right now, it is too soon to tell. Broadcom, it is also trying to make a bottom signal above our support level, above the 21-day EMA, the exponential moving average on the daily chart. Now, yesterday we saw a bullish reaction. Today we see a bearish reaction, but we are still above the 21-day EMA. Broadcom could also be a buy to us, but this reaction alone is not convincing, at least not according to my standards. I see more interesting opportunities over there, more than Micron, more than Broadcom, but right now I have to admit, I have to confess, it is looking interesting indeed. I would just prefer to see a sharper correction, maybe to the $211, maybe, right? But it is still too soon to tell. Of course, I'm gonna keep you guys updated in this channel every single day. Therefore, if you are not a subscriber, consider subscribing, because we are here every single day talking about many stocks. You will receive unbiased analysis of the market, always paying attention to the technique, always focusing on technical evidence instead of working with guesswork, gut feelings, right, assumptions. No. Here, we only work with the technique. We only work with a crystal clear strategy, because that's the only way, guys, that's the only way that you can avoid getting stressed in this market, all right? There is no reason for you to feel stressed. There is no reason for you to feel anxious in this market, because if you work with a clear strategy, that's okay. You understand that you can't control the market. No one can control the market. Some people believe that there are market makers over there and that they conspire against us, right? They conspire against you. If you buy Broadcom right now, it is going to drop. If you sell Broadcom right now, they will know it and they will buy it and make you stop, make a huge loss for you. No, that's not the reality. That's not how it happens, all right? We see a multitude of players. We are all constantly trying to fight each other, but if you have a clear strategy, that's fine, because you control your risk. You need to control yourself in order to achieve consistency in this market. Therefore, subscribe to this channel if you agree with these ideals, and remember to click the like button to support me as well, my dear friend. Thank you for your audience. Join the 5% project. Stay safe. See you guys tomorrow.